Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, December 13th at about 3:15 p.m. Eastern. Well, Wall Street's main indexes are choppy today, kind of up and down, as yields on government bonds are ticking higher. Still, an upbeat forecast from Broadcom kept euphoria around AI in a very bullish mode today. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $604.11. And that's about 6,041 on the S&P 500 itself. This is very near the all-time closing high, which we just had right there on December 6th at $607.81. And as we know, the closing high is always the most important print of the day. Now we can see right now that the SPY is trading above the red line, the 20-day moving average, which is coming in at $599.82. We can call it 600 if we want. It's also trading above the 50-day moving average, the green line, which is coming in at $589.19. Now, you can't see it on this chart, but the SPY is basically, with, of course, a few exceptions, because markets trade in cycles, not straight up or straight down, we hope, but has been basically been walking up the 20-day moving average, the red line, since October of 2023. Again, you can't see it on the screen. In October 2023, the SPY made a low at that time at $409. After that, it reverted and started climbing higher, much of the time above the red line, the 20-day moving average, climbing higher to where we are now. And you know what? Since that October low, at the price of $409, it's made a 49% gain. So that's pretty sweet. Again, we know profit taking along the way always comes in. Hopefully not too bad. We can look left here and see one example of that. If we look at the chart back here in the July highs, we know that it was rallying up here pretty well to about 565. Then and walking above this 20-day moving average, as it had been doing for quite some time, again, except for a few exceptions here. Then the SPY dove dramatically for the last half of July. It opened in August. On August 5th, we know that it opened at $511.64. Fortunately, back then, that was the low. It rallied for the next few weeks, rallied back up to 565, basically where it was in July. So that was a good thing. Then in September, it rolled over back down below its 20-day and 50-day, down to $539.34 in September. Then it jumped up to where it is now, back over the 50, back over the 20-day, moved up along the 50-day, over the 50-day, back up to over the 20-day moving average, then through September, through October, continued to walk along the 20-day moving average, made a quick low here down toward 570, but was held up by the 50-day moving average. This was the election right here. So it moved back up here to about 600 in November, then back down to the 20-day, then kept moving up above that and is now trading at a slight premium to the 20-day moving average. Again, that's coming in at $604.04. Now, if we want to here, we can draw a trend line. It won't be a very long one, but it's certainly a good one. This, if I can draw along with this, I think these two are coming in pretty close. The 50-day and the moving average and the trend line are coming in very, very close to each other, which is a good thing and a strong thing. strong point to make here. If we look at resistance highs here, say what's it going to bump into next possibly, we can look up here at 608 and call that resistance. We also, if we're down to support here, we have this low at about 600. I'm sorry, the November high of 600 coming underneath that. Right now we have 600 here for potential support. We have 599, which is basically the same thing as potential support whenever you get potential price support and an indicator coming in at the same place. That's always a good thing, even though a lot of people say MAs are not indicators. Still in all, it bodes well. Then, of course, again, we have potential support at the 50-day moving average coming in at 589 and just barely below that, the November number down here. So we're looking here, and we do have for potential support, we've got the October low at 568. And of course the 200-day moving average, hopefully we won't have to use that. That's down here at $549. So again, we would like for the SPY to at least stay above this trend line, even though if it does have to take a breather here. It's been going up for quite a while, and it may look just a little tiny bit tired here, and well, it should. Remember that that the markets trade in cycles. Again, they don't go straight up, and hopefully not straight down. So the market does trade in cycles. Profit taking does come in the short term as well as the long term. So just remember again that the FOMC rate meeting is next week at 2:15 p.m. on Wednesday. So we want to keep that in mind as well. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100 index, very important in the NASDAQ stock market. And of course, it does have in it stocks like NVIDIA, the big momentum stocks, NVIDIA, Meta, Apple, Tesla, that whole group. Now, today when I captured this chart, the Qs were trading at a premium to their 20-day moving average. They were trading, or the cubes as we call them many times, it was trading at $530.18. This is right along at the, so far, the all-time closing high on December 11th at $529.92. So we're cutting that close. Again, we can see that the Qs are trading at a premium to their 20-day moving average, which is coming in at $513.91, and certainly to the 50-day moving average, which is coming in at $503.41. Now, interestingly enough, if we look back at the July highs back here, the July highs for the Qs were at 500. Was at 503, and I'm not sure if I can pull this off or not, but that's kind of interesting because it comes in, don't know if I can do it or not, but I should come down a little lower here. At any rate, the 50-day moving average is coming in at 503, and those July highs back here were at 503. Now, we know after the cubes made that 503, at the time, of course, it was an all-time high. Right after that happened, then price rolled over into this dumpster dive here, fell down to an August 5th open at $424.71. Fortunately, it rebounded for 3 weeks, coming up here to make an August high at 486. Then rolled back over, couldn't handle it, rolled back over down to 448, again back down through the 20-day and 50-day moving average, but then rallied again, and very nice. So then rallied again. You could almost, I don't know, might be stretching it a little, you could almost see reverse head and shoulders here. Well, I don't know, it's not too bad. Again, moving up to a September high here at 494. Then it moved back down to the 20-day moving average and started walking up the 20-day moving average again. Fell down for the last few days of October, bounced up on the election up here, back using the 50-day as support, back up through the 20-day, back up to a pop in November up here, then back down to the 20-day, and then again started walking up that 20-day moving average. Both indexes have been doing that quite a bit to where we are now, again at $530.18. And if we want to draw a trend line here, we can draw it up underneath these lows and see how nicely price is moving up like that. So we say, well, what's going to happen next? The FOMC meeting next week will have a lot to do what happens next. They'll have a lot. Interest rates, after all, are the cost of money. The cost of money pretty much rules a lot of the world, but let's see what happens here. We're going to call resistance up here now at 533. That would be close to today's highs. We can look at November highs at 515 for potential support, which is right about there. And of course, the 20-day moving average is coming in at 513.91, essentially 514. So plenty of potential price support should the Qs need it, and they may. Again, it's been going up for quite a while. We'll see. Back down here to where we see that 503 coming in, the 50-day moving average at 503. Then we can use potential support down here at the 50-day. We've got, again, we have the October lows down here at 483. So all of these lines and zones here are potential support for the Qs. Again, we always like a simple point to use, that we always like it if it'll stay above the 50-day moving average. That's always a good watch line to have. So let's keep an eye on the FOMC meeting in the coming week. Our last chart today is a daily chart of the Global X Autonomous and Electric Vehicles ETF, the DRIV. The DRIV has 75 holdings, including, and it sounds like the list of the Qs that we just talked about, Tesla, NVIDIA, Microsoft, Alphabet, and Honeywell. It has 75 holdings, so it has quite a bit. This is one easy way to own Tesla, NVIDIA, and Microsoft, and Google as well, if you like. But again, there are 75 holdings, so there's kind of a spread here. When I captured this chart today, the DRIV was trading at $23.90. Now, we can't see it on this chart, but I always look at a long-term chart of anything I'm thinking about getting into. And if we looked at a long-time chart of the DRIV, we would see that it made an all-time high in November of 2021 of $37.37. It fell from that 2021 high gradually down, and by 2022 it was trading in a range of about 20 to 25. Now, when I captured this chart today, we see it trading at $23.90 above its 20-day moving average, coming in at $23.66. Above its 50-day at $23.34, and its 200-day right here at $23.46. So all these moving averages are coming together. So if we look back here, I always like to look at kind of recent activity. If we look back here, we can see that in July, it seems like everything made a high in July, right? The DRIV made a high in July at $25.46. From there, it made a pretty dramatic fall. That was ugly. It made a pretty dramatic fall down here to the August low at $20.13. From there, it rallied back up to $22.75. Then fell down here. What we always want to watch when price is retesting lows, we want to see if it makes a higher low, and it certainly did. It made the August low down here at 2013, rallied, and then fell down and rallied from a higher low here at $20.70. Then it rallied back up over the 20-day, over the 50-day, back up to the 200-day moving average, which was coming in at the time at about $23.50, we'll call it. So it got up over that, then fell back down in October, November. It hit the 50-day moving average, and except for a couple of days, it kind of used the 50-day moving average as support, then popped back up in November. I am not sure. That may have had something to do with the election, but anyway, one way or the other doesn't matter. It moved back up over the 200-day moving average, back down to the 50-day in November, then kind of sidestepped along, gradually stepping higher on the 20-day, popped up again in December, then back down to where we are now at $23.90. So what I'm looking here for, I'm watching it. It is again above the 50-day, the 200-day, and the 20-day moving average. What I'm looking for here, first of all, we can call this a double bottom if we want, but what I like about it is it's making a very typical handle here, which is this sideways action here. So what I'm also seeing here, and I hate to add more to the bunch of stuff on this page, but I'm going to do it anyway. What I'm looking at here is to see if this forming triangle, which actually looks like a pretty decent handle to the double bottom, if this triangle can break out here. Operative word is can, but I want to see if it can break out here. So if in the coming week, see these highs here, I want to see if it can break over these highs. So if in the coming week the DRIV can stay above its 50-day moving average, and again that's coming in at $23.34, if it can stay above that, I will buy a small position of the DRIV in my trading portfolio. I'm going to put a stop down here at $22.50. That's where I'm going to put my, $22.75 is where I'm going to put my stop. If and when, and then I will have that stop in, if and when the DRIV can move above $24.50, I will add to my position, and my stop will be a trailing stop, of course, by then. So you may want to keep an eye on the DRIV in the coming week. And now, you may already know, please know that at ToniTurner.com we've lowered the price of all of our online training programs to make them more accessible to everyone, and you can give yourself a nice Christmas present. Invest in yourself. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. Trade the Trend to Profits, and that's right here, one of my favorites, shows you how to enter, manage, and earn maximum gains from long-term trades. In this training, you will discover how to spend less time researching and monitoring your open trades while you learn how to take bigger profits out of the market. I like that. This course teaches you how to buy low and sell high and do it successfully from now on. Our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever popular 7 steps to successful trading, how to swing trade successfully, again, trade the trend to profits, how to read charts, 3 winning setups, bottom fish like a pro, and there's more. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check out these programs by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.